keeping in mind that we were down around 1.3%, loss of around 430 points for the day. And again, a fair amount of volume given the fact that we do have futures close out, given the fact that we've also seen a bit of negativity coming through from the Eurozone. Just to give you an update there, there's still a lot of concern that we might just see another downgrade in the Eurozone era, given the fact that we've actually seen the likes of Moody's and S&P coming out and giving out those warnings. In the meantime, the EU summit over the weekend seems to not have allayed the fears that most people had expected. And again, just looking at the top 40 and how it has performed today, Naspers is up 1.3%, Bidvest up 0.6%, one of the only companies that actually gained ground today, with Harmony down 5%, Implats down 3.4%. And it seems that Grant Nader is now standing by at the Renaissance Capital floor. Thank you so much, Grant, for joining us. Great to have you on the program. As I mentioned, Naspers up 1.3%, Bidvest gaining 0.6%. ArcelorMittal also ending the day up around 0.4%, but that's pretty much it with regards to the positivity on the top 40.
That's right. Positive moves were restricted solely to the industrials. Some of the really defensive stocks, we also saw BTI and SABs up on the day. As for the rest of the market, there was a lot of pain to be taken. Really focused largely on the resources, actually, as we saw commodities across the board, from copper to platinum to oil, all taking a big knock on the day as the euro broke below the key 130 level against the dollar.
With regards to what could actually occur going forward, and I mentioned that we've got futures closeout tomorrow, it is usually met with higher volumes. Are you expecting this tomorrow? Do you think there's going to be quite a bit of window dressing in a sense?
I think there'll be a large volume on the day tomorrow, as we often see, for two reasons. We have the futures closeout, and we also have a rebalancing on the index tracking front. That is really where all the volume and interest is coming from. At the moment, it feels like the real players, the real investors, are largely sitting on the sidelines, and there's a serious lack of interest in buying this market with any commitment, or in fact in selling the market.
Would you say that the lack of interest really emanates from the fact that we still have not seen decisive action from the Eurozone, and some very disappointed with the rhetoric that actually came through from Ben Bernanke overnight?
I think that has absolutely hit the nail on the head. You know, we see ongoing comments out of Germany squashing calls for ECB printing press to be switched on, which is one of the last great hopes for the European solution. When they turned to the Fed, Bernanke came out last night, really nothing in the commentary. And so the market doesn't really know where to turn. There are no big summits on the horizon. There are no big meetings on the horizon. So where the next sort of fillip for the market is coming from is hard to say at the moment.
Grant, as you mentioned, index rebalancing also occurring tomorrow, and from my understanding, I know that ArcelorMittal is actually going to be out of the top 40 and then going to be replaced by the likes of BTI. What kind of other massive dramatic movements are you expecting in the index rebalancing that will be occurring?
Those are the key changes. We're getting BTI coming in and ArcelorMittal going out, as you've said. BTI is a large inclusion relative to the typical index rebalancing trades. So we expect to see a very large closing auction tomorrow. And a lot of interest. Really what it does is it creates a broad spread across all the other stocks in the market, a really high volume, but the real action is concentrated in those two stocks.
Off air a little earlier, I asked you for your stock picks and you actually giggled. I'm sure that it must be really tough to commit any new capital to the market right now. You were saying there wasn't conviction with regards to selling or even buying in the market. What are you up to at this point, Grant?
I think the strategy for me is fairly clear in that I would look for defensive stocks with a secure cash flow, a good dividend paying record, and not very vulnerable to the global fluctuations that we're seeing at the moment. You look for good entry levels where you're getting good dividend yield in what is really a low interest rate environment, and you be patient and you buy those stocks on the dips. The likes of which would qualify would be the BTIs, SABs, ShopRites, really quality industrial stocks. They may be fully priced at the moment. It might be an interesting level to be buying them at, but you need to then look at perhaps the second liners like a Bidvest. AVI came in with great results yesterday. So there are stocks out there in the industrial space, perhaps even in the financial space, that have solid track records and have lower risk earnings. That's where I'd be looking.